Hello everyone, welcome back to All Financial Discussion channel. For this video is actually a start of series of discussion. This video, I'd like to discuss how can we actually build our retirement fund with Singapore dividend stock. So imagine this, if you retire and you want to build your retirement fund, I'm pretty sure that you will definitely not want to use your principal at all. You only want to use your principal to generate passive income. For example, dividends can be a source of passive income. Imagine this, some stock actually do give some attractive dividend. So this can be a source of passive income for your retirement fund. So basically, the objective of this video is to discuss the different categories of dividend stock in Singapore. For example, currently in Middle East, in fact, there is a conflict. Because of this conflict, certain categories of stock, in fact, benefit. Certain categories of stock, in fact, have some impact. Some categories of stock, in fact, has a very huge impact. So basically, we need to understand the different types of categories of dividend stocks in Singapore in order for us to generate passive income and have a fulfilled retirement plan. So basically, this will be the objective of this video. Before I continue, guys, this is very important for me. I would like you to help me by like this video. Guys, it's free and just a few seconds. Help me press the like button now. For those who are new to this channel, and if you want to support me, please consider to subscribe and turn on your notification bell. Once again, thank you so much for strong support. A quick disclaimer, this is not a financial advice. Please conduct your own independent research and consult a professional if needed. Never invest more than you are willing to lose. With this, we are ready to kickstart today's discussion. This video, in fact, I have discussed earlier on. This video, I actually distinguish the difference between value stock and growth stock. Let's come to the growth stock first. Okay, so in Singapore, frankly, there is hardly any growth stock. If you are looking for growth stock, you probably can look at US S&P 500, probably China market and Indian market. In Singapore, like I mentioned earlier on, it is almost very challenging to spot a growth stock. However, on the other hand, Singapore actually has a lot of attractive value stock. When we actually want to build our retirement fund, like I mentioned earlier on, this is to generate another passive income. So therefore, these dividends can be a source of passive income, which is ideal for your retirement plan. So basically, the objective of this video is to discuss the categories of dividend stock in Singapore. So this will be the objective of this video. This list over here shows the different categories of Singapore dividend stock. But in the interest of time, this video, I will only discuss the first three categories of Singapore dividend stock. The first one will be Singapore Bank, Singapore REITs, and last but not least, Singapore Telecom stock. So what I will do is, these are the subtopic. I will describe all these subtopic for these three categories of Singapore dividend stock. For example, for Singapore Bank, I will identify the key player, okay, which is DBS, OCBC, and UOB. Next, I will discuss the typical dividend yield of Singapore Bank so that you can decide whether you want to invest into Singapore Bank or not. Next, I will discuss why we want to invest into Singapore Bank, and if we invest, what will be the risk. Next, I will discuss the opportunity window to buy Singapore Bank. Next, I will also mention when we need to be careful. Last but not least, I'm going to have a simple strategize. How can we actually profit by invest into Singapore Bank? So like I mentioned earlier on, all these subtopic, I will describe all the different categories of Singapore dividend stock so that you are aware when to invest into the categories of Singapore dividend stock. Coming to my first category of discussion on Singapore dividend stock will be Singapore banks. Okay, so in fact, Singapore banks are well known to be well capitalized. They have stable earning and they give out consistent dividend, although they are not always the highest possible dividend that is given out by the Singapore dividend stock. Next, coming to the key players, we have DBS, OCBC, and UOB. Their typical dividend yield is around 4 to 7%. Next, why invest into Singapore Bank? Okay, so they in fact have a strong balance sheet and they are often benefit from higher interest rate. Okay, so although there is a lot of so-called rumors that Fed probably will cut the interest rate, but I believe that the interest rate will still remain high. So with high interest rate, this simply means that the bank will have a higher net interest margin. So this is actually benefit in terms of profit for the bank. The three bank, okay, so DBS, OCBC, UOB, they are in fact the market leaders in Southeast Asia. Coming to the risk, cyclical, they are actually tied to economic growth. Okay, so when the economics is good, there will be a lot of demand for loan. Okay, because company want to expand, and when the economy is good, so therefore they seek a loan from the bank. This is actually beneficial to the bank. As I mentioned, the bank is also very sensitive to the interest rate cycle. So when Fed actually cut the interest rate, the bank will be affected. Next, I would like to discuss when is actually a good time to buy the Singapore bank stock. So from here, you can see that I have identified 5 windows to buy the Singapore banks. The first one is during market pullback. In fact, this will be the best opportunity. At this moment, okay, the overall market in fact dropped, okay, because of the conflict in Middle East. So therefore, this is in fact the best opportunity to invest into Singapore bank. Next will be the bank price. Usually, they will actually fall below fundamental actually weaken. So therefore, this is also another good entry point. Next, when the interest rate are high or rising, okay, so this probably is not the situation currently. Okay, so banks actually earn more from lending spread. Okay, so look to accumulate early in a rate hiking cycle. Okay, so like I mentioned, I believe that interest rate will not increase anymore. Okay, most likely they will hold. Okay, so this is probably not the situation currently. Next, when valuations are attractive, okay, so in fact, banks actually give out a very attractive dividends. So when the dividend yield is closer to the higher end, okay, which is 6 to 7%, this in fact can signal a certain value in terms of Singapore bank stock. Next, on temporary bad news, okay, but strong fundamental actually remains. For example, okay, short-term loan concern, and in fact the region slow down. This is actually another opportunity for you to buy Singapore bank. So just need to be very careful. Okay, so if the balance sheet are still strong, often this actually indicate a strong buying opportunity. Coming to my last window to buy Singapore bank is actually buy it before the dividends capture, okay, so that you can enjoy the benefit of dividend. So buy it before the dividends can secure a significant payout in terms of the dividend. But please be very careful. Okay, you need to avoid chasing if the price has already run out significantly. Okay, so over here, these are the 5 opportunity for us to invest into Singapore banks. Next, I'd like to discuss when we need to be careful when we actually invest into Singapore bank. Firstly, will be the late stage economic boom. Okay, so basically, this is actually behind us at the end of the year 2025. In fact, is actually the late stage of economic boom. At that time, probably you can see that Singapore Bank, the share price is at or near the all-time high. Next will be the interest rate peaking and expect to fall. Like I mentioned early on, interest rate for 2025 has been persisting high. So therefore, this year we are going to anticipate a few cuts. So this is actually the situation now. Next, sign of rising bad loan or credit stress. Coming to the simple strategy, how to invest into Singapore bank. So we should decide to buy the Singapore bank during fear. For example, currently there is a conflict in the Middle East. This actually potentially open up the opportunity for us to buy Singapore bank. So next, we supposed to hold the Singapore bank share for some time. This is because Singapore bank actually give up a very attractive dividend. So we supposed to hold it for a while. We can actually so-called reinvest the dividend back into the principal. So when this actually become inferior again, we can consider to sell some of the share. So therefore, from here, this is how we supposed to do when we actually buy the Singapore bank stocks. Before I continue, this is in fact very important for me. I like you guys to help me by like this video. If you have learned something from this video, I appreciate you can show some form of support by like this video. When more you guys actually help to like this video will have a better chances to reach up to a larger audience. So guys, help me press the like button now. For those who want to support me, please consider to subscribe to this channel and turn on your notification bell. Once again, thank you so much for strong support. Next category of Singapore dividend stock will be Singapore REITs. Okay, so in fact for me, Singapore REIT is actually the better buy at current situation. So in fact, their business model is on income-focused investment that actually they own and also they actually manage the real estate asset. Coming to the key player, we have the CapitaLand Integrated Commercial Trust, we have the Mapletree Industry Trust, Ascentus Real Estate Investment Trust, and Fraser Logistic and Commercial Trust. They typically give out a dividend yield between 5 to 8%, okay, which is slightly higher as compared to Singapore Bank. Why invest into Singapore REITs? Okay, because they are stable and in fact they actually produce a very regular income like dividends. So they will actually give up dividends in a quarterly, okay, which means that every year 4 times, or semi-annual, which means that every year they give up 2 dividends. Next will be the investment is actually backed by real asset, okay, because they actually own the property. Next will be inflation hedge. Okay, basically when rent can actually rise over time. Okay, so currently in Singapore, the rent in fact is at near all-time high. So this is actually very beneficial for us to invest into REITs. Next, diversification across sector. Like I told you that typically they manage their retail, office, logistic, and nowadays we have a in thing which is data center. Coming to the risk, okay, so in fact, risk is very sensitive to interest rate. The higher the interest rate, in fact, is actually bad for REITs. Okay, because when the interest rate is high, which means that they need to have a higher borrowing cost. Like I mentioned earlier on, they invest by buying property, okay, which typically when the interest rate is high, they actually has a higher borrowing cost. So this in fact lower their valuation. So next, in terms of the risk, okay, when the property market actually downturn, okay, where there is a lot of vacancy, when the rent actually start to decline, currency risk, okay, so this is actually for overseas asset. Okay, so when the overseas asset, when their currency actually drop, this will be another potential of risk for Singapore REITs. Next, I like to explain when is actually a good time to buy Singapore REITs. Okay, so firstly, when interest rates are peaking or they are about to fall. Okay, so this is actually current situation. We know that interest rate has been persistent high. Okay, in fact, last year and recently, there will be probably a good chance for them to cut the rates. Okay, so REITs in fact perform best when interest rate pressure actually is. Because of lower financial costs, this actually means that REITs in fact have a higher valuation. Next opportunity will be during the sell-off, which is driven by rates fear. Okay, so I don't think we are at this situation. Okay, so basically price often drop sharply when interest rate actually rise. Like I mentioned, at this moment, I don't think that Fed will increase the interest rate drastically. Okay, next will be the income may remain relatively stable, okay, because of the higher yields. Next, when yields are historical high. Okay, in fact, they can be even higher than 8%. Okay, so when the dividends is actually higher than 8%, this in fact indicate potential undervalue. So this is actually a good opportunity for you to buy Singapore REITs. Next, you can in fact compare against Singapore government bond yield. Okay, so basically this is another so-called indication when to buy REITs. When price to book is below historical, okay, so you can compare okay, typical Singapore REITs okay, based on its historical value. When it is so-called below, this in fact suggests that assets are trading below the valuation. So basically, this will give you a good margin of safety if fundamentals are intact. Next, with strong sponsor plus resilient asset. Okay, so basically we buy REITs when they are actually backed by strong property groups, for example, Capital Land and Maple Trees. Okay, so but nowadays we actually focus on the in thing, okay, which is the data center. So anything on REITs with data center probably will be a good buy currently. Okay, so this is the buying opportunity for Singapore REITs. When we need to be careful when we actually buy Singapore REIT. Firstly, rapid rising interest rate. Okay, so I believe this is not the current situation. Next will be on the weak property sector. Okay, basically you can see that the office is empty, the retail mall is also empty. This simply indicate weak property sector. Next, high debt level. Okay, so basically they are gearing close to regulatory limits. Falling distribution. Okay, so basically these are all the indication that you need to be careful when buying Singapore REITs. Coming to the simple strategy. Okay, so accumulate during fear. Okay, for example, there is actually a conflict in the Middle East. Okay, so we can start to accumulate Singapore REITs. Also, okay, because I believe that the interest rate will start to cut, this in fact will be beneficial for REITs. So therefore, this is actually the best opportunity for us to accumulate Singapore REITs. Next, okay, when we actually buy REITs, okay, basically we want the dividend. Okay, so we need to hold for the income. Okay, for REITs, it's basically for long-term investment. If you plan to do some form of short-term investment, this is probably not your choice. After you get your dividend, it will be best that you can actually reinvest the dividends in order to compound returns. So this is basically how you actually play to buy Singapore REITs. Coming to my third category of Singapore dividend stock will be Singapore Telecom stock. Okay, so in fact, Singapore Telecom stock is known to be defensive. There are also dividend-focused stock with stable cash flow from telecom service. The key player will be Singtel and StarHub, and the dividend typical yield will be between 4 to 6%. Why invest into Singapore Telecom stock? This is because they are in fact very reliable and they actually generate recurring cash flow from mobile, broadband, and enterprise service. They also often offer steady dividends even if the market is actually not that ideal. They are in fact defensive sector, so therefore they are actually less sensitive to economic cycle. They are exposed to region operation, especially for Singtel. Okay, we know that Singtel actually invests into Australia, Indonesia, etc. Coming to the risk, okay, so there are a growing in terms of competition in telecommunication. Okay, we know that Simba probably will buy M1. This in fact will increase the competition. This in fact will pressure in terms of their profit margin. Next will be the regulatory change. Okay, because 5G, for example, okay, we have the license renewal, we have the spectrum fee. This can be quite costly for telecom stock. Next, slower growth as compared to tech companies. Okay, so telco is definitely not so-called not considered as tech company. They are not a growth stock. They are in fact a value stock. Next will be the debt level. Okay, so like I mentioned earlier on, 5G, okay, they can be very expensive when they actually build the 5G infrastructure. This could be very expensive and this could potentially drive down the profit for Singapore Telecom stock. When is a good time to buy Singapore Telecom stock? Okay, so during market correction, okay, in fact, now is a good opportunity for you to buy telecom stock because currently there is a huge market correction. Singapore telecom stock is known to be defensive, okay, so which means that naturally they will be able to recover steadily after bond market actually drops. For Singapore telecom stock, they in fact offer a very attractive dividend yield. Okay, so even when the price actually dip, they still offer very attractive yield because their profit is actually very stable. Okay, their profit is based on broadband, based on cellular. So therefore, even at bad time, the yield, dividend yield, in fact, is still very attractive. Next, when dividends yield actually spike above the historical average. So as I mentioned earlier on, typically Singapore Telecom give a dividend yield between 5 to 6%. When they are actually at the upper range, this probably will be a good indication for you to invest into Singapore Telecom stock. High yield may signal undervalue or temporary market panics. Next, when interest rates stabilize or in fact they fall, as I mentioned earlier on, they are actually defensive. So when interest rate fall, this probably will be so-called beneficial when you actually invest into telecom stock because the impact is not that severe as compared to the rest of the stock. Okay, so telecoms are leveraged business. Lower rate actually reduce the financing costs. Next, ahead of positive characteristic. Okay, for example, okay, we probably don't have 5G roll up. You can wait for 6G roll up, region expansion, spectrum auction. All this can in fact boost the earning and long-term growth. Next, when fundamental remains strong despite temporary negative news. For example, okay, short-term regulatory fine. Okay, so you probably can hear that recently, okay, Singtel has a so-called some network actually fear they probably will potentially face some regulatory fine or in fact some competition pressure. Core subscriber base and in fact the cash flow will be resilient. Okay, so this is actually the buying opportunity for Singapore stock. When you need to be careful when you actually invest into Singapore Telecom. For example, aggressive competition actually erode the profit margin. Okay, so like I mentioned earlier on, Simba probably will buy M1. This potentially increase the competition. This may drive down the profit margin. Next will be the rising debt cost in a higher interest rate environment. Dividend cut or payout ratio approaching unsustainable level. So pay some attention on the dividend payout, see whether they actually cut the dividend payout. This probably means that when they actually reduce their dividend, this means that they are unable to sustain this kind of dividend payout anymore. Which region market affect the earnings? Coming to the simple strategy, how we actually can buy into Singapore Telecom stock buy when yields are high. Okay, so basically, like I mentioned earlier on, dividends, okay, for telecom, which is very attractive. So as long as the fundamental remains strong, we can actually buy Singapore Telecom, for example, Singtel, in order to have passive income like dividend stock. Hold for consistent dividend and plus some moderate capital growth reinvest the dividend in order to maximize the compounding. Okay, so this is for Singapore Telecom stock. This will be the end of today's discussion. This video, I have discussed the three categories of Singapore dividend stock. Firstly will be Singapore Bank, second will be Singapore REITs, and last but not least, Singapore Telecom. Over here, okay, I have discussed when you actually can buy the window for the buying opportunity and also when you need to be careful. And I have also discussed the simple strategy when you actually invest into this three category of stock. With this, that's all for me for this video. I hope you can help me by like this video and subscribe to this channel. Once again, thank you so much for strong support. I hope to see you guys soon.